The markets are closed, but the business stories are just heating up. Hello, I'm Robert Tan. Catch up with us on Business Brief. Asian shares rose moderately after a lackluster finish on Wall Street. This with most shares ticking higher after the Federal Reserve left its main interest rate unchanged as widely expected.
Look, I don't think anyone should be surprised that the Federal Reserve held rates constant at the last meeting. Ultimately, the Federal Reserve is facing an incredibly uncertain situation with the imposition of Trump's tariffs. No one knows how long they'll last and how high they'll go. And in a situation like that, where we're seeing the risk of high inflation and low growth, the Federal Reserve chose to sort of wait to see how the economy plays out rather than make a big move in either direction.
Taiwan's TAIEX rose 0.84%. Hong Kong's Hang Seng added 0.63%, while Japan's Nikkei 225 gained 0.46%. South Korea's Kospi also edged up 0.47%, and Australia's ASX 200 climbed 0.28%. India's Nifty is flat with a downward bias, while Indonesia's Jakarta Composite Index was the biggest laggard, falling 0.53%. And in the currency markets, the greenback is flat with an upward bias against the Japanese yen and climbed 0.14% against the Hong Kong dollar. The Australian dollar appreciated slightly by 0.25%. The US dollar also gained 0.17% versus the Singapore dollar and 0.36% against the South Korean won. However, it fell 0.28% against the Thai baht. Gold slipped by 0.24%, while oil prices mostly rose. West Texas Intermediate crude climbed 0.83%. Brent crude added 0.67%, but Dubai crude dipped 0.74%. In the crypto market, Bitcoin surged nearly 3% and Ethereum jumped almost 6%. The U.S. Federal Reserve holds interest rates steady, defying political pressures from President Donald Trump, who has been calling for lower borrowing costs. The U.S. Central Bank warns that risks to the economy are growing, with both inflation and unemployment pressures tilting higher as the Federal Reserve weighs the impact of President Trump's tariff policies. Despite these, Fed Chair Jerome Powell says the economy remains fundamentally strong and that current monetary policy gives the Fed flexibility to act swiftly should conditions change.
The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks.
Trump previously called Powell a major loser for not acting faster to boost the economy, but on Monday he backpedaled on earlier threats to remove him. U.S. President Donald Trump said he will soon announce whether the U.S. will ease microchip export restrictions to some Gulf countries. Trump is preparing for his first major diplomatic trip next week. That includes a 3-country Middle East tour. The Biden administration imposed strict controls on exports of American AI chips to the Middle East. This is due to concerns the semiconductors could be diverted to China.
Are you planning to ease chip export restrictions to some of these Gulf countries and then also make announcements regarding...
We might be doing that, yeah.
And their nuclear programs, civilian nuclear programs?
And it'll be announced soon.
Big changes are coming to Netflix for the first time since 2013. The streaming giant is revamping its homepage in a bid to make it look cleaner, simpler, and more modern. For one, the main menu will be moved from the left-hand side to the middle of the page. Netflix will also offer a vertical feed on its mobile app to allow users to easily scroll through clips. Additionally, the streamer says it will begin testing an AI-boosted search feature on iOS, where subscribers can ask for content in natural and everyday language. Apple's AI-backed Safari may end Google's grip on online search leadership. The iPhone maker plans to add AI-powered search options to Safari, a threat to Google's $20 billion a year deal to stay as the default search engine on Apple's browser. With the news, Google's parent Alphabet shares plunged 7%, a $150 billion value. Apple is testing rivals like ChatGPT and Perplexity for its AI choice. Entertainment giant Walt Disney Company beats earnings expectations, with overall sales jumping 7% to $23.6 billion in the first quarter of the year. Disney Plus subscribers grew to 126 million in the first quarter, adding over 1 million new sign-ups, defying analyst expectations of a decline. The gain came as a surprise boost for Disney's streaming business, which remains a key growth driver. Meanwhile, Disney announced plans to open a Disney theme park in the United Arab Emirates, its first in the Middle East, but no opening date was set. And we're taking a short break. The biggest business stories from around the country are up next. You're watching Business Brief. The government has approved more infrastructure flagship projects, bringing the total to 207 projects worth $178 billion, or roughly 9.86 trillion pesos. That's according to the Department of Economy, Planning and Development. DepDev Chief Arsenio Balikasan said these projects aim to lower costs, promote inclusion, and build resilience across the economy. The bulk of the projects are related to physical connectivity, followed by water resources and agriculture, among others. Last year, the government completed 7 infra flagship projects. It aims to complete 13 this year. Fresh data from the Philippine Statistical Authority shows stable growth at the start of the year. We have Sujin Kim for the details.
Robert, the Philippine economy posted a 5.4% expansion in the first quarter of 2025, according to the latest data released by the Philippine Statistics Authority. The services sector remained the dominant driver of economic expansion, led by wholesale and retail trade, financial and insurance activities, and other services. Industry recorded a 4.5% growth, driven by manufacturing and construction, while agriculture, forestry, and fishing managed a modest 2.2% growth amid climate-related challenges and supply chain disruptions. Meanwhile, household final consumption expenditure, which accounts for about 70% of total economic output, grew by 5.3%, supported by improving employment and rising remittances. Government final consumption expenditure surged by 18.7%, reflecting election-related spending and increased budget utilization in key public programs. However, gross capital formation grew at a modest 4.0%, indicating caution among investors amid global uncertainty. On the external front, exports of goods and services grew by 6.2%, but this was overshadowed by a sharp 9.9% rise in imports, resulting in a significant trade deficit that continues to weigh on the overall economic balance. The rise in imports was largely driven by higher demand for transport equipment, industrial machinery, and electronics, signaling improved business sentiment but also exposing the economy to external risks. Meanwhile, the Bangko Sentral ng Pilipinas is expected to maintain a cautious monetary stance to support growth, particularly in capital-intensive sectors like manufacturing and construction. While the near-term economic outlook remains positive, economic managers have highlighted the need for further structural reforms to avoid falling into the middle-income trap. This includes greater diversification of export markets, investment in technology, and enhanced productivity in key sectors such as agriculture and manufacturing. And those are latest updates from Quezon City. Back to you, Robert.
Thank you for that report, Sujin Kim. The government's outstanding debt rises to 16.68 trillion pesos as of end March, marking a slight increase from the previous month. Data from the Bureau of the Treasury shows this is higher than 16.63 trillion pesos recorded at the end of February. This is also higher than 14.93 trillion pesos recorded at end March 2024. The rise in debt comes amid a sluggish growth environment and a shift in monetary policy, with investors watching closely how the country manages its fiscal position as interest rates begin to ease. The stronger peso has yet to make a significant impact on slowing inflation despite appreciating against the U.S. dollar in recent weeks. The central bank notes that while the peso has been appreciating against the dollar, the impact on prices typically takes several weeks or months to materialize, particularly for imported goods like food, fuel, and industrial inputs. A stronger peso is good news for importers who now need less local currency to purchase goods from abroad. The comment comes as inflation cools to 1.4% in April, the lowest level in the more than 5 years. The BSP says exchange rate moves could provide further relief as long as global supply conditions remain stable. Economic Planning Secretary Arsenio Balisacan is downplaying concerns that the drop in inflation signals weak consumer demand. Balisacan says the sub-2% inflation in March and April, while unusual, is not a sign of economic stagnation. He notes that domestic demand remains intact, and if there are any signs of softening, they are likely tied to global economic uncertainty, not internal weakness. He says the lower inflation should be seen as an opportunity, potentially creating room for policy support and greater purchasing power. The Department of Economy, Planning and Development, or DepDev, says the Philippines should pursue more free trade agreements, or FTAs, beyond its top trading partners to widen market access and stimulate economic growth. DepDev Secretary Arsenio Balisacan stresses the urgency of expanding trade deals, citing Singapore's extensive FTA network as a model amid the weakening influence of the World Trade Organization. He notes that having an FTA with the United States, for example, could help reduce tariffs on Philippine exports, making them more competitive in a tightening global trade environment. Balisacan also emphasizes the need to revise the country's sectoral negotiation strategy and strengthen coordination among agencies, with the Department of Foreign Affairs taking the lead in trade talks to ensure that Philippine interests are effectively represented in future FTAs. While a dedicated trade office was once proposed, Balisacan says it may no longer be necessary if existing interagency efforts are well coordinated and strategically aligned. A major safety push is rolling out on Philippine expressways as the Land Transportation Office cracks down on reckless driving. The LTO says most road accidents are not due to bad roads or weather, but driver error, underscoring the urgency of stricter enforcement. Our mobility correspondent G. Baroga has this report.
Zero accident. That's the big goal of the Land Transportation Office. The deputized enforcers are now being deployed across the country's expressways. This nationwide crackdown follows a surge in deadly crashes, most of them caused not by bad roads or weather, but by human error. According to the PNP Highway Patrol Group, over 31,000 road crashes were recorded in 2024, over 4,000 of which happened on expressways. And the main culprit? Reckless driving. From overspeeding to improper turns, basic driver mistakes continue to top the list of crash causes, avoidable errors that are proving fatal. Most of the crashes involve cars, which account for more than 17,000. Motorcycles came in next with over 15,000 incidents, while buses were involved in just over 1,000.
Ang problema pag bus ang involved, more often than not, may fatalities. Diba? Pag sa expressway nangyari, it's not much. 13% of all accidents happen inside the expressway. Karamihan ng expressway natin are all located here in Luzon. Isa lang ang nasa Cebu.
That's why the LTO is boosting its presence in expressways, from more enforcers to more lights, speed guns, and mobile patrols operating round the clock. And reforms are also underway in how drivers are trained and licensed.
Wala nang face-to-face kasi baka doon pa nagkakaroon ng magic. No? With this development, once we complete this entire infrastructure, this online infrastructure, then lahat po ng ating loopholes sa driver's license natin, masasagot na po natin. Strict implementation lang.
Transport Secretary Vince Dizon earlier said the government is open to teaming up with the private sector and civil society groups to tackle road safety together.
And yes, we will work with them. No? We will work with the different groups and consult with them and ask for ideas and also help in enforcement. No? Kasi importante dito and help in also bringing to our information all these incidents.
The message is clear. Most crashes are preventable, and road safety isn't just up to the government, it's everyone's responsibility. So whether you're driving a car, a motorcycle, or a bus, drive safe and help prevent another life lost on our roads. For BNC Mobility, G. Baroga.
An industry player is calling on both government and the private sector to stamp out corruption in the construction industry. This comes amid speculation that corruption may have contributed to the recent accident at the Ninoy Aquino International Airport, where a car crashed into the terminal, killing 2 people, including a 4-year-old girl. Jose Aliling, Chief Executive Officer of the Construction Management Group, tells Bilyonaryo News Channel's Business 360 that corruption compromised projects.
Now, simulan natin to dun sa mga ongoing construction projects. Hindi natin to gagawin sa future projects. Kasi yung mga ongoing projects na yan, dapat yung implementing agency, pagka mali ang ginagawa, huwag niyong tanggapin. Until the time na hindi yan ini-issuehan ng Certificate of Acceptance, pwede mong sabihin sa contractor, boss, hindi comply ang ginagawa mo, ulitin mo yan, hindi namin tatanggapin. Yun ang first line ng defense ng safety ng public. Yung mga nasa gobyerno, gawin natin yung dapat natin gawin.
Investigations of the Manila International Airport Authority and New Naiya Infrastructure Corporation shows the bollards that weren't buried deep enough contributed to the car crash. MIAA General Manager Eric Ines says the barrier post installed in 2019 cannot be embedded deeper into the concrete since the arrival area is below it. And we're taking a short break. Business Brief. We'll be right back. SM Investments Corporation's consolidated net income reaches 20.1 billion pesos in the first quarter of 2025. In a press release, the Bilyonaryo C-led firm said its first quarter net income rose nearly 10% to 20.2 billion pesos, up from 18.4 billion in the same period last year. The company cites broad-based growth across its core business segment as the main driver of stronger earnings. SM Investments Corporation President and CEO Frederick Dibuncio says consumer confidence remains strong and that the company's diversified businesses are well positioned to serve demand across all categories. He adds that the group continues to invest in innovation and expansion to sustain long-term growth. However, SM says it continues to monitor global macroeconomic uncertainties, including volatile commodity prices, geopolitical tensions, and interest rate risks, even as it remains positive about the Philippine economy's resilience and growth prospects. Philippine shares snap its 2-day win streak after the Philippine economic growth for the first quarter of the year fails to reach government's target of 6 to 8% expansion in 2025. The PSE index ended lower by more than 1% to close at 63.89, finishing the day as the worst performer in Asia. All sectoral indices ended in the red, with holding firms falling the most at more than 2%. Decliners outpaced advancers 75 to 113. Total value turnover reached 6 billion pesos. Majority of the day's most active stocks ended in the red, with Ayala Corporation falling the most at nearly 3%. Meanwhile, at the foreign exchange market, the peso is currently trading at 55.55 against the greenback, weakening from previous close of 55.40. And that's a wrap for today's Business Brief. I'm Robert Tan. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News Channel. See you then.